In the currency quadrant, taking a look at the June Canadian dollar future, which today produced the fourth up move in price against the US dollar in the last 5 sessions. The total move higher in those 5 sessions has been 1.17%, and since the swing low on May 12th, the Canadian dollar has rallied over 2.4%. The low today in the future session is 72.87, which was down 0.13%, and the high today in the session so far is 73.25, which is up 0.39%. And I say so far because there is time left in the future session, but at the close of the New York cash session, the Canadian dollar is still up about 1/3 of 1%, just short of today's highs. The Bank of Canada left short-term interest rates unchanged this morning at 2.75%, but stated there could be a need for a future rate cut. They pointed to persistent uncertainty surrounding U.S. tariffs and global trade tensions. Also, that recent economic data had shown stronger than expected GDP growth and unexpectedly firm core inflation in Canada. The central bank opted to pause and gather more information before considering further moves. Labor productivity in Canada was also interesting when it was released this morning. After 3 consecutive quarters of falling labor productivity growth, Canada has shown 2 quarters of positive growth, which is really good for GDP and fights inflation. And this is likely one of the reasons the Bank of Canada felt comfortable pausing on rate cuts. It's been such a back and forth, unclear situation that in March of 2024, Carolyn Rogers, who is a senior deputy governor at the Bank of England, gave a speech titled "Time to Break the Glass, Fixing Canada's Productivity Problem," which is obviously a reference to there being an emergency. As traders of the Canadian dollar, we'll be watching whether the 2 consecutive quarters of productivity growth is a new trend in Canada or just a blip.